Today is the 8th of July, 2014, and this is episode 125. This episode is intended for informational and educational purposes only. Cryptocurrency is a new field of study. Consult your local futurist, lawyer, and investment advisor before making any decisions whatsoever for yourself. Welcome to Let's Talk Bitcoin, a twice-weekly show about the ideas, people, and projects building the digital economy and the future of money. My name is Adam B. Levine, and today we're back in the flow. This episode marks the start of our 51% Solutions series. For the next several episodes, you'll find at least half the show devoted to interviews and discussions about the problem of miner centralization and some of the proposed solutions. Today we kick things off with a conversation I had with Andreas a few weeks ago. We briefly catch up on his projects, then jump right into the ghash.io controversy, the true threat of the 51% attack, and what it all means in the big picture. Part 2 of today's show comes to us by way of Thomas over at worldcryptonetwork.com. At the recent Bitcoins in the Beltway event, he caught up with the mysterious Bitcoin musician Zhou Tonged. They talk origins in music, trading, and influences. Enjoy the show. So Andreas, it's been a while since we've had you on the show. How you doing, man?
Doing great. It's been rather busy, and I had one of those life events, moving out of a house, which was stressful and time-consuming, but all is well, and I'm really glad to be back on the show.
So Andreas, you're working on one of kind of the more comprehensive books in the Bitcoin space, and I know you've been working on it now for we're coming up on a year, I guess, in a couple of months. Can you give us kind of an update on that for people who are waiting for it to come out?
The book is Mastering Bitcoin, and it is being published by O'Reilly Media, which is one of the leading publishers for developers. They have an excellent series of books with animals on the covers called the Safari series. And Mastering Bitcoin is going to come out as part of that. We've already got pre-sales up on the O'Reilly website. And as I promised in the early days, the book is available under an open source license. So it's currently available as an early release draft that people can buy. But it's also available on GitHub, and people can go and read it, and even do pull requests and submit issues and make changes to the book as it's being developed and see the development live. The first 4 chapters are already published, and working on chapter 5, which is about transactions. And what I'm looking at the moment to see if the community would contribute various code snippets, recipes, bits of code that demonstrate various concepts that I can include in the book. So I've received tremendous support from the community. So many people have submitted fixes and corrections and added bits of content, and it's going very well. Expected publication is going to be in the fall of 2014. So now's the final stretch for the book. I expect to finish it in the next 2 months. After that, it will be available in print as an ebook, as well as an online download under a Creative Commons attribution license, so that anyone can read it and share it and even mash it up.
Andreas, so one of the other reasons why you haven't been on one of the, some of the recent shows is because you're also teaching a class at the Nicosia University. It's a MOOC. So is this something that's available for people at this point?
Yeah, absolutely. So the University of Nicosia, which is in Cyprus, has a very broad English language program on a variety of subjects. They have many different departments, including a computer science department. And as a cross-disciplinary program, they offered probably, I believe it was the world's first master's degree on the topic of digital cryptocurrencies. So they call it the MSc in digital currencies. That program started about a month and a half ago officially. If you remember, the University of Nicosia was also the first university to accept Bitcoin payments for its tuition. But they're also teaching a master's degree in cryptocurrencies. And as the precursor to the master's degree, we're doing a massively online open course, also known as a MOOC. This is a course that's offered as a series of presentations together with interactive Q&A sessions with the instructors and quizzes. This is an introductory course for digital cryptocurrencies and Bitcoin, which teaches you about Bitcoin. The purpose of the course is if you take the MOOC, you can then use that as credit towards the master's degree if you decide to continue. If you complete the course and the testing requirements, then you can use that as part of your credit towards a master's degree. Or you can just take the MOOC just as an introductory course to Bitcoin, and it's completely free and anyone can sign up. There's a wealth of material and it covers quite a broad set of topics. It's not just technical. There's some technical information, which is more computer science oriented. There's some information that has to do with economics and business and finance and law. So it's, again, a cross-discipline course. And I've been teaching. We've covered the first. I'm going to be doing the next session's Q&A on Monday for session 6. And all of those are available online, both the materials as well as the recorded Q&A videos and interactive sessions.
I'll just set up a forward link for that. So you can go to letstalkbitcoin.com/MOOC to get directly linked to that.
Yeah, it's very exciting because, as one of the first universities, obviously, to do this, they're forging ahead and creating a new academic discipline here. It has been obvious to me, at least from the very beginning of my involvement in Bitcoin, that this is a very important invention in computer science, and it's a computer science primitive, a system for achieving consensus on a distributed system that has many, many broad applications, but it also has many important implications in economics and business and finance and law. So I love the fact that this is both a cross-discipline course, as well as that it's being taken very seriously as an academic subject for computer science students.
Who is a course like this for?
It's very approachable, very accessible. It's not just for computer science students, although obviously there are going to be parts of the master's degree that are going to be heavily focused on software development for cryptocurrencies and algorithms and using the consensus algorithm system. But those are elective. So the MOOC itself is introductory. It's very, very open and accessible to all. And it allows people to get a broad understanding over a period of 12 weeks and 12 sessions of what cryptocurrencies are and how they affect these various areas. And it introduces all the various areas. Now, from that point, a student who is interested in a computer science discipline can take a course heavily loaded on software engineering electives, whereas a student who's interested more, for example, in business and finance may take the same master's degree heavily loaded with electives in business and finance.
So the course is free. How long does it go? You said that there's another lecture on Monday. This probably isn't going to air for another 2 weeks or so.
Well, the first 6 weeks have already happened. So we're about halfway through the course right now, but all of the material exists online. And as soon as the first iteration of the MOOC is finished, I expect we're going to be running another iteration with improvements and keep running that course. So people can sign up now and go back and catch up on the previous material by video and the stored material online, and then they can continue following the course, or they can sign up in the next iteration or do a bit of both. So it's a very flexible course. Like many of the MOOCs, it's designed for professionals who may not have time to attend all of the sessions or may not have time to do a classroom type environment, but in this format, they can organize it around their schedule.
That sounds awesome. Really cool that you're teaching that. So the rumor going around is that Bitcoin is over and it's the fault of mining. And we've destroyed ourselves. We've destroyed it all. You know, what fools we were. And it's been sort of interesting because I guess I should back up a little bit. There's been a lot of concern about 51% attacks as one of the larger pools, ghash.io, has approached and surpassed the 50% mark. And so again, like that's sort of this magic number in the world of Bitcoin. Since it's a consensus-based reality, if you can control the majority of the consensus, if you can control the majority of the participants, then you can control the consensus and basically do what you want, is the perception. But I think that it's being a little bit overplayed in the way that I'm seeing people talk about it. And Andreas, we've had this conversation in the past. I kind of want to chat with you about 51% attacks.
Well, 1 second. Let me just pull out the wheelbarrow of Bitcoin obituaries from my storage unit here and add one more to the pile. This is the familiar cycle of sensationalism and Bitcoin is dead. Bitcoin is not dead. By the way, I think bitcoinisdead.com is still up there. Maybe I can register the domain bitcoinisunderder51%attack.com and redirect it to isbitcoindead.com. And it will just say no. So is Bitcoin under 51% attack? No. This is overblown.
The possibility is there now. That's the thing, though, is that it's a possibility.
The possibility of being hit by an asteroid is there too, but there's a difference between possibility and probability. This is a possibility, but it is a very, very, very low probability. It is a highly improbable event, given the incentives, the structure, the possible benefits of doing this, and the very, very easy to apply countermeasures against such an eventuality. I think people grasp the 50% number and see it as an ominous warning, as a sign of the end of Bitcoin, which is ridiculous, because there's a very, very big difference between, first of all, achieving 50% of the hashing power in one pool versus controlling 50% of the hashing power, versus even more so, that 50% of the hashing power being in the hands of dishonest miners who control it fully, and then launching a 51% attack, which is the ultimate extreme. And what we've seen is the first of those. We've seen a pool briefly reach 50% of the hashing power, but that doesn't mean that they actually control all of that hashing power. It also doesn't mean that they're dishonest, and it certainly doesn't mean that they're launching a 51% attack. So yes, if there was a 51% attack, now listen, even if there had been a 51% attack against Bitcoin, I dispute the idea that that would have been the end of Bitcoin. I think it might have been a serious crisis in confidence. It might have affected the price in the short term. It may have led to changes in the code and countermeasures, and then Bitcoin would be back, even in the face of an actual 51% attack. And what we have here is nothing of the sort. What we have here is a pool briefly reaching 50% of the hashing power through a collection of the mining power of many, many miners.
Yeah, let's step back and start from there. Let's start from, okay, so ghash.io, there are lots of different ways you mentioned here that we can kind of find ourselves in a situation where we have this type of crisis. And it can be because it's a pool that has a large amount of mining power in it, because it makes sense for mining power to pool itself into the largest pool, because it means that you flatten out the variance in terms of how much you're able to generate, how many Bitcoins you're able to generate, since you're hitting more blocks but getting less of each one. So that is in itself a much less dangerous thing than if there was a single bad actor out there that had 50% of the hashing power in a warehouse full of ASICs and, had the intention of doing something malicious. Because with a pool, essentially, as soon as somebody realizes that something like this is going on, all of the people who aren't bad actors, who are just in the pool because it's the most profitable place for them to be, they essentially jump out. And in practice, I think that we've seen that a couple of times. But it's really interesting how we do hover around this high 40% number.
Well, as you said, because there are economic incentives that encourage people to participate in pools that are successful. The success leads to some degree of centralization. But this is not centralization of control. This is centralization of the pool. That doesn't mean the pool has control over the destinies of these miners or over how that hashing power is used. They only have that briefly as long as they are supporting the goals of those miners, which are economically viable and the economic advantage of the pool. If they at any time took advantage of that to do something nefarious, it would immediately contravene the incentives of these miners and they would abandon the pool. Now, what we've seen is even the appearance of risk has led to miners leaving the pool. And as a result, today, if I'm looking at the stats correctly, Ghash is at about 38%. But the point is that people are confused about what you can do if you launch an attack, and this has nothing to do with an attack. Yes, the issue of centralization of ASIC mining is a problem, but it's not a long-term problem. It's usually a short-term problem that occurs in cycles, and we've seen the cycle happen before, and it's usually resolved fairly quickly by market forces. Ghash was one of the first organizations to centralize by creating very large hashing farms of their own and offering those to shareholders and making it very easy essentially to buy a share in a mining farm that was very, very large. And it's one of the first successful professional mining farms. And guess what? When you are one of the first successful professional mining farms, you get some advantages of being first to the game, but it also attracts other entrants into the market. And we're seeing a lot of other big players gearing up to replicate replicate that model, which means that over time, we're going to see other mining pools also offer professional mining farms and easy to use pools that can achieve quite a bit of hashing power. And again, that will lead to another massive increase in the total hashing power of the network. The bigger the hashing power of the network gets, the less possible it is to shift it with any single player. And even GHashIO, even though the pool has that kind of percentage, that's not all the farm. That's the mining farm that GHashIO actually controls, creating an economy of scale that attracts a lot of other miners who are then pointing their mining rigs to this pool and supporting it and taking it even further. If they all abandon GHashIO, you would see that they have a lot less of the total control of the power. And again, there's a very big difference between having the hashing power and actually using it for evil. And I'm not saying we should trust GHashIO. I'm saying we should watch very carefully. But even if there was a 51% attack, I don't think that would be the end of Bitcoin. And we're nowhere near that situation.
Okay, but let's assume for a second that we are, because a lot of people are concerned that we are near a 51% attack, because even though you're saying that it's incredibly unlikely, the reality is that it is technically possible now, while previously it wasn't. It was possible to try a 40% attack, which is, of course, much more difficult, but, still plausibly you could do it using things like selfish mining and some other techniques we've talked about in the past. But essentially, what could happen? What is a worst case scenario here? If ghash.io actually does have the ability and they're like, we don't care about the repercussions, we don't care about the incentives, and their miners are like, we don't care about the incentives, we're not going to leave. Let's just assume for a second, 51%, what can happen? I send you some Bitcoin, Andreas. What happens to that? Does anything happen?
So it's important to realize exactly what it can do and what it can't do, because I think that's part of the reason there's all of this panic, is because people don't really understand the repercussions of a 51% attack. Let's look at the technical repercussions. First of all, a 51% attack doesn't give you the ability to spend other people's Bitcoin. A 51% attack doesn't give you the ability to redirect Bitcoin to another recipient. A 51% attack doesn't give you the ability to steal anyone's Bitcoin. A 51% attack allows the pool operator to rewrite recent history by essentially orphaning a number of blocks that are on the blockchain as recorded. And essentially what that means is that with enough hashing power, a pool operator or a large coalition of miners that have 51% attack could roll back time 2 or 3 blocks, maybe even 4 or 5 blocks, then race against the rest of the hashing power to recalculate those 4 or 5 blocks, creating an alternate chain, which then, once they win that race by mining 4 or 5 blocks in a row and creating a longer chain, they end up reconverging the network around their new chain and orphaning the previous 3 or 4 blocks that the network thought were confirmed and are now orphaned. So they create a fork. So essentially 3 or 4 blocks that everybody thought were confirmed suddenly get orphaned and replaced by different blocks that extend the ancestor block, if you like, the one that's 4 blocks back, and extend it with a new chain with 3 or 4 new blocks on top. Now, the question is, what transactions are in these new blocks? If it's exactly the same transactions, nothing changes. The risk here is that in orphaning the old blocks, they can introduce transactions that contradict transactions in the previous 3 blocks, but only if they own those.
So if a 51% attack happens and during those 6 blocks where it is going on or that are going to be replaced and orphaned, as you've said, I do not do anything with my Bitcoin. This does not affect me in any way, and it's impossible for it to affect me, right?
Yeah, that's correct.
Okay. If I make a transaction, if I send Bitcoin from me to you, the worst thing that can happen is it gets canceled, right?
That's correct. Yes.
Okay, because if it's canceled, then they don't have my keys. They can't retarget it. No. But it just didn't actually happen because it was thrown out with those blocks. Okay.
Which means that if in the meantime I shipped you a product because of the Bitcoin you sent me, and I assumed that after 3 or 4 blocks that was confirmed and I shipped a product to you, I'm going to be out by a product that I sent you, and I'm going to be pretty pissed off.
So it hurts basically anybody who, well, but again, if we're only talking about 5 or 6 blocks, you're talking about, again, assuming we get the crazy 40-minute Bitcoin block, sure, it's a couple of hours. Most physical products aren't going to ship in that time.
Well, keep in mind that in order for this to happen, during this period of time, what you have is a very, very obvious long fork, right? So that 3-block forks don't happen. They simply don't happen. So if suddenly you saw a pool starting to recalculate 3 blocks back, that would have alarm bells ringing everywhere. And if that created a fork with a race then between 50% of the pool power trying to extend that chain, while the other, the 48% or whatever, is trying to extend the old chain. During that divergence of 3 blocks, alarm bells are going to be ringing everywhere. Now, last time there was a 3 or 4 block divergence, which was in April of 2013 due to a bug in the code of 0.7 version of Bitcoin. I think it was around the 3 or 4 block level where the emergency broadcast system was activated and merchants were told to stop accepting transactions. So that's the level of notice that creates. In fact, there's a parameter in the Bitcoin Core client that will notify you if it sees a chain divergence by more than a certain number of blocks. So you can set it, for example, to send you email if there's more than 2 or 3 block divergence. More likely, a 51% attack would instead try to orphan a single block and then just do it much more often than normal, and try to play shenanigans during a single block rather than try to do a massive 3 or 4 block chain. But again, how many merchants ship with 1 block confirmation and don't notice that has been orphaned? How many merchants actually ship within 10 minutes or even within an hour?
Well, it's interesting because even with digital items, I know more merchants that do distribution of digital items based on 0 confirmations than based on 1. I mean, if you're going to wait for confirmations, people actually tend to wait for a couple of confirmations. But for digital items, because there's no per item cost or per piece cost, a lot of times it's just easier just to say, okay, well, I see the money is coming in. So again, like it seems like the attack vectors for this are pretty limited. So
well, no, the main attack vector for this is to do a withdrawal of Bitcoin from an exchange and then invalidate that withdrawal.
Okay, and so that's specifically, again, you're not talking about like some random person. You're talking about like the pool owner, the person who's targeting what the pool is doing. They're the only person that can actually pull something like that off. If you're a miner, even if you're 20% of it, because you're getting work from the pool's actually what's controlling it, right?
Right. They would basically have to send the way the pool works is they will send a block template, as it's called, which is a start building on top of this block. And, here's the, Coinbase you should use for it. And here's the payout address for the pool. And then each miner will put their own transactions in based on what they've seen. So essentially the pool operator can roll back that, and instead of building off on top of the latest block, build 1 block behind, forcing one of the existing blocks that's been accepted broadly by consensus to be orphaned when it was unnecessary. So I believe that certainly in the case of digital items, that might be a concern. So if Ghash wants to use double spend transactions to buy Justin Bieber singles, that might be a strong motivation for a 51% attack.
Barring that, there aren't too many things that you can do with it. So,
well, there are. There's one more scenario. Let's talk about the other scenario. The other scenario is to use this to do a denial of service attack, which means that you purposely invalidate blocks mined by other pools, essentially shutting other pools out of the market. So that's a kind of hostile takeover, aggressive action against the other pools, making the other pools unable to mine blocks, because basically what that would mean is anytime, say one of these pool operators sees another pool successfully mining a block, right, with a minority power, purposefully retarget the mining to the previous block in order to orphan it, thereby essentially getting 100% of all of the blocks mined by that one pool.
Okay, so this seems, again, like that attack vector is specifically against other mining pools. So it seems like there are 2 primary things that can be done with a successful malicious 51% attack. One is you go to an exchange and you try and essentially It's actually kind of similar to the transaction malleability, right?
I mean, like in
the weight effect.
Exactly.
Yeah. So you're able to double spend using this, and then the other side would be,
and the other side would be a denial of service attack against a pool, or a denial of service attack against a specific recipient of transactions. For example, you could say, anytime I see a transaction going to a specific party, I'm going to orphan the blocks that transaction is in order to invalidate it. So to hurt a specific recipient by making it impossible for them to receive any Bitcoin, because every time they try to receive Bitcoin, the block that transaction is in gets orphaned. But again, it's very difficult to do this in a subtle way. First, because everybody's watching and watching very carefully, especially as pools get closer to 51%, their activity is scrutinized very carefully. And secondly, because if you try to do some cartel action like this, there are some aggrieved parties who would be obviously affected and very loud, and would complain. This is not something that you can do on a subtle basis. And as soon as that happened, then we would see countermeasures implemented in the network.
And we've actually had that conversation with Gavin Andreessen before. I think that, there was a comment from maybe 6 months back. I can't remember the context what it was in, but it was something like this. It's that, if any pool tries to pull off something like this, we're going to basically change the rules so that you can't do it anymore. And at the time we were like, well, that's sort of a weird thing to say, but I guess it could probably. I mean, it seems like, that's always a possibility since this stuff is so transparent. If this really is serious enough to take down Bitcoin, then the incentive isn't just for the people who are doing the attack, but the incentive is huge for people who aren't doing the attack to find some way to stop it. And so again, like, it's interesting because every time we get close to one of these pressure points or these magic numbers, the community freaks out. And it's great because this is exactly why things get fixed, because people notice and are upset about it. And it's exactly why things don't get fixed in the real world.
Here's the thing. I mean, there's a big difference between I'm not worried about the possibility of a 51% attack because I think it's highly unlikely. It goes against the incentives of miners, especially the ones who currently are coming close to having that kind of hashing power. It makes no sense. It delivers very little advantage for a very short period of time to a player who is immediately noticed and will attract countermeasures and the scorn of the community. So I'm not worried. That doesn't mean I think that concentration of mining hashing power in a single player or under the control of a single pool is a good thing, or that miners shouldn't leave Ghash and go, for example, and the best answer is go to P2 pool, the peer-to-peer pool that doesn't have an operator that's purely peer-to-peer. I think that is a good answer. I think that miners should purposefully dilute the hashing power of the leading pool at all times in order to keep it in its place, if you like, to keep it from amassing too much hashing power, that even if it's not immediately used in an attack, creates a possibility for shenanigans and certainly creates a reputation risk, and it makes people worried. So for all of those reasons, it's in the incentive and interest of the miners to move to a pool that has less of the hashing power and to equalize things. But that's a very, very different statement from I'm worried that the 51% attack is imminent, likely, or even probable. I think it's highly improbable, complete waste of time. Even if it was done only for malicious purposes by a malicious actor, there are probably easier ways to do that. And again, it would fail. It would lead to changes in the protocol. Bitcoin would become more robust. As a result, Bitcoin would bounce back once this problem was fixed, if it needed fixing. And we would put one more obituary on the pile to ignore and laugh at later. I really don't think this is what is going to damage Bitcoin. I could be wrong. I could be entirely wrong. Maybe I've missed something really important, and it's just my personal opinion, but honestly, I'm not worried. I think it's a highly theoretical attack. It's very interesting to look at the game theory implications and to try to make the network more robust. It's interesting to look at the market dynamics behind this. And I think, as before, we're going to see the market cycle repeat, and the leading pool won't be the leading pool for very long. And that's fine.
So we tried to get Peter Todd on for today's show to have a conversation about this because, I mean, among other things, I think the thing that I hope people take away from this is that the way that Bitcoin is set up right now, where we pay a single block reward to a single individual, which has led to all of these pools. I mean, we don't see in practice people having these gigantic farms with the intention of taking over by themselves the Bitcoin network. But we do see it possible because of the way the pools have been set up. And P2Pool is a solution, but it's a less efficient solution for a variety of reasons, not the least of which is that you need to run your own node. So, which is to say, have a full copy of the Bitcoin blockchain, whereas with a pool, you simply don't. And so there's more to do there than if you were taking the easy way. So what I'd really hope we could see come from this is some more attention be paid to tree chains. Because tree chains, again, that's the first protocol suggestion I've seen that really looks like it could bring solo mining back in without fundamentally reinventing the wheel or asking people to buy new hardware. So, I mean, like, that's the thing that I hope is that we can use this as an opportunity to really think about what the incentives are pushing people to do and hopefully maybe try to change the protocol so the incentives are a little bit better.
I think it's important to realize that tree chains are not the only way to solve that. There are many other recommendations that can make things. Ghost protocol, for example, is another approach. So there are proposals that involve splitting the reward so that the winning block gets a high percentage of the reward, but any orphaned blocks that are correct, that have actually achieved the proof of work algorithm, but for whatever reason didn't propagate as fast, also get a percentage of the reward. That's called the Ghost protocol. That model very simply realigns the incentives in such a way that it is worth mining orphan blocks because you get some reward, which actually ends up then smoothing out the variance in reward and lessening the need for pools. There are really two forces in action here. One is the centralization caused by the density of ASICs and the rapid development of ASIC technology. And that leads to some centralization in mining, which is not necessarily a bad thing because the alternative is, as we've said before, is botnet mining. So you have to strike a balance between those two extremes. Just this week, we saw, for example, there's an article in Ars Technica that talks about a hacker who used the firmware inside network attached storage devices to run script miners and compromise thousands and thousands of storage devices running in corporate offices, use them to mine Dogecoin, and made about $600,000 worth of Dogecoin in just a few days of mining. That's the risk of going to CPU-friendly mining, which is that the amount of CPU lying around in machines that are easy to compromise in people's desktops, in grandpa and grandma's desktop, in attached and embedded devices like routers and storage systems, etc., is immense. So not only can you have botnet mining, but you can also have rent a 51% attack where you could rent a massive botnet and use it to gain a significant percentage of the total mining of the system. Those are the risks against ASIC centralization. So you have to look at this as a compromise. ASICs actually do provide some benefits. And then the second thing you have is centralization because of the pool dynamic or the pool economic incentives, which is that if you mine alone, you're playing a lottery where you win rarely and you lose a lot, and you have to be in it for the long game. And that's a very difficult way to amortize the cost or the investment you have in hardware, in ASIC hardware. So you're taking a very, very big risk if you're playing that kind of lottery game. Whereas if you mine as part of a pool, and the bigger the pool, the better, then you're going to receive a smaller reward every time, but it's going to be more consistent over time so you can pay back your hardware investment. So that leads to centralization of pools. And again, these two issues have two different sets of solutions. But at the moment, I don't see the huge panic to start making changes to the protocol. I think it's important to realize that a lot of the alternative proof of work schemes that are being proposed and the alternative protocols that are being proposed are fundamentally untested, whereas Bitcoin's proof of work has persisted for 5 years, has been extremely successful at resisting attacks. And while we're talking about these theoretical, it continues to remain the most robust consensus algorithm, the most highly scaled consensus algorithm by several orders of magnitude, and the best proof of concept we've ever seen in this environment. And all of the other contenders are great in theory, but none of them has been tested at this scale, so we don't know how well they're going to work.
Today's episode, in addition to our LTBC sponsors, is brought to you by CryptoKit. CryptoKit is a web wallet that installs right into your Chrome browser, so it's always there right when you need it. It also has a built-in encrypted email client using PGP, lets you control your private keys as a brain wallet, and just generally is free and awesome. Check it out over at CryptoKit.com. Today's top LTB coin sponsor, with a high bid of 10,000 LTB coin, is CoinFire.cf. CoinFire.cf is a newer crypto coin news and commentary site. Quoting from their page, CoinFire was started because I got sick and tired of reading reviews on sites that were full of advertisements, dishonest statements, and news that was just posted to create link bait. End quote. This is a very familiar urge for me, folks, and I wish Mike all the best over there. Taking a look at the front page, actually I was surprised to find an article about a 24-hour Bitcoin radio station that'll be launching soon and of which I was completely unaware of. Now I just need to get CoinFire to move their site onto the LTB platform. Just kidding. Or am I? No, I'm not. Our second sponsor for episode 125 is actually a donation sponsor. Brian Cohen of bitofthis.com asked us to highlight the Bitcoin Foundation, so let's take a little time to chat. The mission of the Bitcoin Foundation is threefold: standardize Bitcoin, protect Bitcoin, and promote Bitcoin. This means that, in practice, they put on occasional conferences, occasionally interface with government bodies who misunderstand what they can or can't do with Bitcoin, and basically act as the public-facing voice for those looking for answers from an institution they would recognize as being legitimate. Say, for example, if you trust a foundation more than you trust the internet. That's not to say the foundation performs a function that couldn't or isn't being performed elsewhere, but they are doing meaningful work. Recently, they announced their 6th international chapter, put on their recent Amsterdam conference, where Let's Talk Bitcoin was pleased to win the Most Informative Podcast Award. I'm not actually sure if we've mentioned that on the show. And there's a lot more too I don't have time to get into here. If you'd like to support their work, the cost of becoming a member is $25 payable in, of course, Bitcoin. If you'd like to learn more, visit them at bitcoinfoundation.org. And if you'd like to use your LTB coin to sponsor the Let's Talk Bitcoin show and have me spend a little time explaining your project on an upcoming episode, head over to letstalkbitcoin.com and select Sponsor from the LTB Coin Rewards Program menu. Once a project wins this, it gives me an excuse to learn about the project and share my thoughts on it with you. So on the other hand, you have no editorial control whatsoever, but then again, it's not really an advertisement because of that, so it's almost certainly more useful to our listeners, and if your project is actually neat, I'm going to say nice things about it. Either way, there's no work to you for doing it, unlike a standard advertisement spot where you have to give me a script. Anything I don't want to talk about will be refunded. Basically, that's just gambling, adult content, and anything that smells like a scam to me. Don't ask me to talk about penny auctions. So we're done. Thanks for paying attention during the part of the show that pays the bills. And now, the Mad Bitcoins interview with Zhou Tonged.
Good morning, Bitcoins. This is Mad Bitcoins live with Zhou Tonged.
Yes. How you guys doing?
You're doing good, man. Enjoyed your concert yesterday.
Thank you.
You guys, you let in for Whitey Cracker, and I don't know if he was ready for it, man. He got out there and he was like, "Whoa, I'm following Zhou Tonged. What has happened?"
He did mention how much he enjoyed it. Wasn't expecting the big show, I guess, or performance.
I think a lot of it was you guys used your videos as part of your act, and that brought it to a whole nother level, the synchronization with the videos.
We like to do that. If you've noticed, or if you're a big Zhou Tonged fan or seen any of our videos, we always put the words in our videos so that you can understand exactly what we're saying, because we're consciously trying to speak a message. Or on every song, if you timeline our songs and when we wrote them and when we published the song out on YouTube, it's relevant to some kind of issue that was going on in that time. When Bitcoin shot up to 266 last year, or when it shot up to, when it shot up to 24, when it hit the 20s, we were in it from $2-3, so when it hit the 20s, we were like, oh my goodness, this is it,
It's hard not to sum off that.
So yeah, we pumped, like, Bitcoin's Back came from that one, which is the Eminem parody that we did this past year around February when the whole Gox controversy happened. We made the Gox, the Snoop Dogg, and parody
Chris
the Gox.
and I were just talking about the Mt. Gox video, and what we said is it's gotten a lot more poignant since Mt. Gox went down. Like at first it was just you got Gox, we had some DOS troubles, or the price drops, those flash crashes, that kind of thing. But now it's like Goxed is a whole new meaning with the collapse.
Oh yeah, the whole meaning. And I mean, as terrible as it sounds, it's something, honestly, with Gox and all the craziness from, if you're an old-timer Bitcoiner and the issues with Mt. Gox, it was something that honestly needed to happen anyway. The fact that we've survived through it with them crashing and all the craziness that happened with it, and I lost, but Zhou Tonged lost money with that situation. You don't think we're immune to any of the effects of things that happen in the market. We were Zhou Tonged originally. That's how we got the name with Bitcoinica in the very beginning, with one of the earlier trading margin trading sites. That's how it all came to be when we started anyway. So we feel the effects too. Don't think that we're sitting on our high horse at all. We definitely.
And that tragedy was a slow motion one. I mean, I know a lot of people had money in there. They tried to get it out 6 months before. They tried to get it out 9 months before. They could not get their money out of there, even though they knew it was going down in slow motion.
Yeah. And like I said, I think now, just my own personal opinion, that it's something that probably Gox itself. If you notice how much smoother the market's been, even though it's not where we want it to be.
No $20 caps in the price.
The volatility has calmed down a bit. And if Bitcoin was to crash, or if it was to go down, that would have been the time that it would have happened. And the fact that we've overcome it and we're still standing and we're here now and all about it, and more companies are joining in, big names are joining in, it just helps me know that I'm in the right place, that our community will strive through this and get through it. We are.
Well, remember what it used to say on their website, 60%, I think, of all Bitcoin traffic, maybe even 70, was through Mt. Gox.
Yeah.
Now it's gone. And yet Bitcoin's still here, right? We're still here.
And we're still at, $600 a coin currently right now. You have to remember that last year in January, we were at $30 a coin. So the fact that we're still at $600 a coin, we are still going to strive, even though, you have the speculators that saw it go to 1,200 and now we're at 6. Oh, Bitcoin. They don't know. And it's okay. We want them to watch. We want them to speculate on it. And I'll make the money from it. So.
And the whole Mt. Gox thing never made any sense to me. I remember when I first learned that it was Magic the Gathering online exchange, I pretty much made fun of that mercilessly in my show as much as I could. And I had a bad feeling about it the whole time. I remember the first time I logged in, it was this really weak PHP application. Right. It just kind of felt like cheap. I was like, this is the best trading site we've got.
They were never really, they didn't really have the platform for that and that kind of volume when we did start to gain some traction and gain some traffic. And so it was bound to happen. Again, us old timer, I apologize if we didn't school you early on to the later comers coming into the game about Mt. Gox. Some things you got to learn, but it's to the old timers. We knew it needed to happen, and it was better that it happened. And I'm glad that they're gone. I mean, that I knew. The fact that Bitcoin has any value, period, shows that we're still standing and we're still strong.
And look what they were doing technically to the community. They confused that whole transaction malleability issue. We still don't really know what went on. Mark Karpelis, the missing Bitcoins. The experts on the outside have said it's not transaction malleability. You did something else wrong, but we don't know yet. We're going to find out. It's a black box.
No industry is immune to controversy and to people being shady. The fact that we caught it early on, again, going back to Bitcoinica, one of the first margin trading sites to trade, we took a big hit. Zhou Tonged took a huge hit on that one, but we survived. We're still here. There's been all different kinds of controversy with Bitcoin and different governments banning it, then taking it back, then taking back what they said, or now implementing and wanting peace, and like the ins and outs and all of that. The fact that we're still here just shows that the technology speaks for itself. It will never go anywhere. If Bitcoin is $3 or $3,000, people will still be using it. It's just going to take time for anyone to really learn it. We maybe need to can figure out ways, programmers can figure out better ways along the line to make it a little more user-friendly. But, I mean, I don't know. At the same time, people should be learning. You should want to learn, and you should, everything is computers now. Everything is new technology building from it. If you're not on it, if you're not schooling yourself, if you're not teaching yourself on new technologies, and I don't know what.
Teach your family and friends, too. I mean, I know I'm tired of removing spyware. I'm tired of setting up people's computers, but Bitcoin is a whole new thing. I'm excited to set up people's wallets, to give them $1, to show them how Coinbase works, whichever site you want to use. It's exciting, it's the future, and it is individual adoption. We need to get our mothers into this, our sisters and our brothers. We need to get them shopping online with this, just trying it out, having fun with it. You know, it doesn't have to be a large investment, you know, $100 there. Just try it out.
Yeah.
Try it out.
No, absolutely. I did that. I've been a Bitcoin so to speak, Bitcoin evangelist the past couple of years. This last year I've lightened up a little bit. I think I got a little burnt out just on my own personally. I felt like I told everybody who I needed to tell about it.
Yeah.
The first person that told me about it and schooled me on it told me, you know, this is like Google 10 years before it came out. Absolutely. You know, and it's just going to take time for it to implement. And the person that told me that this technology is amazing and will do amazing things is probably, in my network, one of the smartest people I know. And computer scientist, computer engineer, dissected the protocol, looked at the ledger, and saw that this was really going to be something. So, you know, it's like that wise man telling you something, you know, telling you that, you know, hey, buddy, time to try this out. And so we've been in it right around after it switched from mining with your CPU to mining with graphic cards. I remember my buddy calling me, telling me, bro, I need graphics cards. Would you please send me back? And was building his own units himself to try to mine for these coins. And like, again, this is when we were at a few dollars a coin. It was, everybody was, you're trying to scream, but nobody really listens anyway. They do, but for the most part, until they see it for themselves, people are seers before they believe, then believing, and then seeing. But that's okay. And then they saw it. And then when we peaked at 266, all of a sudden these people who didn't want to listen to us started calling. All of a sudden we're getting the calls.
Well, I'll tell you, I'm one of those people. I knew about Bitcoin from the beginning. I didn't buy it. I thought about it a bunch of times. I didn't read enough about it. And then when it finally broke through, I'd really missed the boat. And then I just tried to get into it as hardcore as I could, doing the show, talking about it as much as I could, telling everybody I know, just whatever I could do. But you guys started out in mining and investing. How did you get into Bitcoin and music?
Started with mining, and then
a lot of people seem to buy the mining cards instead of just buying the Bitcoin, and we all seem to regret this. Even we bought, you know, a few miners in the last year or so, and we should have bought the Bitcoin. So I don't know, how was that?
Yeah. Well, if you were buying miners last year, it was kind of too late to buy miners. Honestly, we were lucky to take advantage of the first couple of batches of the ASIC miners that came out.
Nice.
But I mean, even those miners now today, they're really just paying for the electricity right now.
Yep.
But yeah, we did try to take advantage of it. So in the beginning, to get back to what you were asking, we started mining, and along with mining, learned, my buddy is a trainer. Zhou Tonged there's two of us, pretty much two of us. I'm the artist and the writer and the musician. My buddy does videos, and he's the brains behind Bitcoin itself. He's the one that pretty much schooled me. He's he's my splinter to you Teenage Mutant Ninja Turtle lovers. He's my Mr. Miyagi to you Karate Kid lovers. And like I said, smartest guy I know. So started learning how to trade, or learning to trade, the skill of just trading itself with him, back with Mt. Gox and back with Bitcoinica. And if anybody knows about trading, you're watching the markets 24/7. Back then, the volatility was crazy, even in these small numbers. So you're constantly watching the markets all day, all night. I've got two monitors up. I'm looking at these different graphs. I'm watching the trends. I'm trying to loosen up the time. We're all musicians as well. I'm a music composition major. We were just watching the graphs. It started with just the two of us just hanging around goofballs, listening to music around the time when being Zhou Tonged got coined as an actual term. We started using it a lot. I don't know if we coined the term or who actually coined the term, but I know that we took it on early on when we were part of that pool or network of people that was using the term. So we have rights, or had rights, to take it on and do something with it. And how it started was we didn't take on the name of Zhou Tonged. We just put out 2 songs. Mm-hmm. And the first song was about being Zhou Tonged, and it was about not having enough money to back up on your price that you bought in at and getting liquidated, and how that happens, and you just got Zhou Tonged.
We were singing about what was happening to you.
Yeah, no, we were singing exactly what happened to us, because again, we're goofballs and just computer geeks and musician geeks. So with that, I started just playing around. I took a reggae song from Sister Nancy, Bam Bam, and I took it and turned it into You Got Zhou Tonged.
Yeah.
Took Lauryn Hill, Lost Ones. She's got a song called Lost Ones, and I turned it into Lost Funds, where you lost your funds by getting Zhou Tonged. And the community loved it. I didn't know it was going to turn into all of
this. It was
this.
going to be a big
We
thing
just put some songs out, and the community loved it and wanted us to do more. So every couple of months, we would put another one out here and there, and anything relevant. Again, some people will tell you if you follow certain things online or follow Reddit. Some people will tell you if you want to know about Bitcoin, just listen to Zhou Tong's songs from the beginning to end on the timeline of when we started the first songs to the very last song that we put out, and it'll kind of school you in a fun way on Bitcoin.
I think I've done that. I pretty much went back and watched the songs in order, and definitely by the time you get to hold for the longest time, your ideas have changed. You're not talking about trading, you're talking about holding.
Right, that was the other thing. It changed from, definitely the trading was in the beginning, and then again, so we got Zhou Tonged quite a few times, totally. The next time when I had a chance to invest, I wanted to just hold.
Yeah.
I just wanted to hold on to them. I knew, again, I didn't want to lose this. I knew the technology was going to be there, so I didn't give up when I got Zhou Tonged. Don't give up on this technology, because this technology is going to be unstoppable in the next 5 years. You just have to be patient. I'm learning patience myself, but I knew that I didn't want to lose on the technology, and I didn't want to miss out if it did skyrocket. So the minute I had a chance to jump in again, I jumped back in again. But yes, my views were a little different, and off of when we were just doing the trading songs, we now had a little fan base.
Yeah.
So we wanted to speak. We wanted to expand off of that. We wanted to really have some fun with it. That's
well, and you're helping to grow the Bitcoin through the music. A lot of people that aren't into it might hear the song and then check it out. It's a new way to spread the word.
Absolutely. I definitely think that music is the best way to pass a message on. And I enjoy doing it. And the community has accepted us and has loved us, and it just makes you want to do more. Anyway, I want to keep putting more music out. I'm wanting to put together, I've spoken to a couple of people in the community wanting to put together a Bitcoin music festival, possibly, even if it's annually. If we can do 2 a year would be cool. But even if we had 1 a year and try to, in the next 6 months, try to get that first annual or the first festival out for the year, I think that would be really cool. It would be same kind of thing like the conventions, where you get some vendors, you get some people selling Bitcoin, and then you have the music that keeps the energy up and going. I mean, we've already, we've got a few musicians already in the industry. Yeah, but Tatiana, myself, you have Whitey Cracker, who performed with me last night. Shout out to Whitey Cracker. He's amazing. His show is great. I'm really glad that I got a chance to hear him live. He definitely, I was a fan before, but never really listened. And being here and getting to listen to him, I got to listen to him, and he's a really smart dude. Really cool guy.
And you guys also influenced him, because he put his words up on the screen after you guys did the videos with the words on the screen. And I from the songs where he didn't have the words, I was way more into the word songs. I was reading and I was seeing little Arrested Development references. I love that show. Snowcraft references. All of his references are so good, and they're so transparent when he's so fast with his words. It's hard to really track the words if you don't have them in front of you, if you're not familiar with the song.
Absolutely.
Like MC Chris or any of those people.
Yeah, no, I think definitely that was one of the things that we wanted to do. I grew up in the 90s, so I'm a big hip-hop head.
I was going to ask you about influences. Are you into like Weird Al, other parody songs?
Oh, I grew up on Weird Al.
Yeah.
I didn't think I was going to be a parody writer or writing parodies, but yeah, when I was a kid, Weird Al was Smells Like Teen Spirit. That album was like one of my favorite of his album. But influences, I was born in these, but I grew up in the 90s. So of course, I mean, some of my older hip hop influences, Rakim, Run DMC, the Heavy D and the Boys, Beastie Boys. Yeah. Then in the 90s, you had your Wu-Tang Clan, Notorious Big, Quale. Most Def, you had a lot of conscious rappers. And so speaking on the videos and because we're more hip hop, if you're not hip hop, it's cool if you're not hip hop. But if you're not a hip hop head, you don't have the ear to be able to catch the lines so much.
Yeah.
So it was a real point that I wanted to make in being able to allow people to really see what we're saying. So we didn't even know that we were going to be performing these songs. We just started videos. We were just doing fun videos. And that was the one thing that I wanted to make sure that I did, is put the words. So I think that was really cool. And that's what made me a big fan of Whitey last night, because I got to see what he was saying more as well. Yeah. Being a hip hop head, I hear what he was saying, listening to it before.
Well, and even in the Scott Cox song, there's a great...
I wrote that Mount Gox thing was happening. Literally, I just happened to be hearing the song, the Snoop, the regular original. Yeah. It just came to me. I wrote the song in a few hours, and I was already recording it by that night. And I called my buddy, and I was like, I think this is the next video to put out. And we put it out. We put it out right around February. And yeah, it was a little crazy. Again, to the newcomers, I know it's a struggle, or, you know, with the whole thing with Gox, a lot of people lost a lot of money.
Yeah.
And I felt, as an old timer, kind of being in the game for a little while, I felt bad. Like, maybe it was my job in a sense to school people.
I'm not even that old into it, and I even feel a little bad. Like, I mean, I made fun of it, I think, as much as I could have, but I never publicly said, like, 100% you shouldn't be in this thing. And it's hard to know. You can't tell the future. And that's what a lot of this is about the losses and things. A lot of people here have had losses. I've heard this from Bitcoin loans, losses from investing in companies by selling your Bitcoin too early. Everybody's gone up and down. That is about learning and about getting older. Just Bitcoin makes you learn so fast.
Yeah, definitely.
I've already lost a couple of minor fortunes, and it's been a year. Not hundreds.
Yeah, no, people have lost. And my thing would be, when it comes to investing, smart investors, don't invest all in one thing. And my advice is, believe in the technology and believe in the coin. If you believe in a company and you want to invest, that's fine. But at the end of the day, believe in the coin. And my advice now, simple, hit you in the head anymore with buy Bitcoin. What I tell anybody now is just buy one. Get yourself one Bitcoin and forget about it. Don't even think about it. And I almost promise you, in 5 years, you will thank Zhou Tonged for telling you to buy that one Bitcoin if you saved it for one Bitcoin. Definitely get in it, get involved. You don't invest all of your money in anything. And know also that when you're investing and when you're trading, you're gambling in a sense. When you're trading, you're gambling. It's stockbroker gambling. You're going to have some gains and you're going to have some losses, but expect losses and hope for gains. Believe me, we lost. I can't tell you, and I'm a poker player too, and I'm telling you, we've lost. But I believe in the coin, in the technology. I'm not going to let it get to me, although I'm sure some people put a lot of money into it, and they put their money into GOT. Again, something that made me feel bad not being the one to spread the message on cold storage, putting it on your own wallet.
It's hard to wrap paper wallet.
Nobody's even ever rapped about money, period. Like, we're rapping about a particular money, and again, I like to say a technology. I don't like to say that it's just money, because it's not just money. It's just a technology that I think is going to do some amazing things.
The blockchain is huge.
Yeah, it is. Oh, so we have an album we'll be releasing August 8th. We're looking at August 8th as being the album release at EVR, Charlie Shrem's bar in New York. It's looking around at being that date, and I'm happy about that. Looking to sell a collector's edition kit along with that. So we're selling CDs. We'll have a collector's edition kit as well, where in this entire kit you'll get a t-shirt, you'll get a mask, you'll get a medallion, you'll get the CD signed. You'll get a USB drive with all of our media, because we've been written about Attic, Yahoo Finance, Quartz, Reuters has written about us, Urban Dictionary. All you have to do is look up Zhou Tonged, and you have one of our first songs on the Zhou Tonged they're talking about us. We're in the Urban Dictionary. You'll get all of our videos on it. We're looking to do that. Keep an ear out for that.
And that definitely is the wave of the future, a collector's edition type package, something for the fans. The music's kind of available, but that kind of a package you're going to want to pay for. You're going to want to keep it, like your one Bitcoin. You're going to want to keep your Zhou Tonged Collector's Edition package. Maybe a nice shelf for it.
Maybe buy two. You buy two, you open one up, have some fun, and you keep one sealed. But yeah, that's what we have in store, and all types of music. There's a Wilson Phillips song that you're going to hear on the CD that I'm sure you haven't even heard that name.
No, I like Wilson Phillips. I have an album, but there's a lot of catchy tunes on there.
Yeah, you're going to hear some Wilson Phillips. You're going to hear some, you're going to hear some joints.
I never expected you to mention Wilson Phillips. People are going to make fun of me for that album.
I am a Wilson Phillips fan, so we're together. They're going to talk about you. They're going to talk about me too. Then, man, Bitcoins. All types of music, anything that comes to mind.
I just realized what song you're going to do. Is it Hold On for One More Day? Do you guys have a website?
The website currently right now, www.zhoutonged.me is the website. We're not selling merchandise as of yet. When August hits, the website will be up and running with all of that, being able to buy the merchandise, everything. We like to push only accepting Bitcoin for the fun of it, to encourage people or force people to use Bitcoin to purchase our items or just get them more involved.
It makes it exclusive. You could only get it in Bitcoin. You have
we
to
like to do that.
Money, yeah.
We like to do that. So we're looking to do that. Try to do some more promoting. We want to perform. I want to, in the next 6 months, I want to book some more shows. So if you're listening, anybody wants to
Bitcoin Chicago, get on it. These conventions, you need the spice, you need the music, something interesting, exciting for the kids, whatever, something.
Yeah, actually Charlie Shrem asked me about Chicago. I told him I would be willing to do it. So anybody on that committee over there work at convention, I'd love to do a set over there. Could definitely do that. Last couple of years, we've kind of been a little more mysterious and have not really shown face so much. That's something that we want to change a little bit this year, taking Zhou Tonged to the next level. We want to be with the fans. I want to be with Bitcoiners. I want to be involved. I want you guys to see me in more of these events. I want to do some more shows. Anything that I can do to help promote, because like we said before, music is an easy way to send a message out. So for any event, even if it's a small event, I'm willing and open to do anything in the Bitcoin community that they would like me to do or need me to do to help out. I'm all for it.
Have you ever thought about playing Bitcoin meetups, maybe something like that? It's kind of small time, but...
Yeah, absolutely. I'm working on something now, booking a show at the New York City Bitcoin Center where they trade.
Sure.
I'm supposed to be speaking. Then we'll have the album release party at EVR. And the next couple of months, just plug in some more shows. If we can get this festival going before the weather gets bad, that would be amazing. Again, anybody interested in putting something like that together, we're going to be doing that as well. Zhoutonged.me, again, is the website. Follow us on Twitter at Zhou Tonged, straight, one word. Definitely shout us out. I love this community. I love Bitcoin. I love everything about it. I think this is our chance and our generation. I like to feel that most of us Bitcoiners are the younger professionals, late 20s, early 30s, late 30s, kind of our generation. This is our chance to really make a difference in our world in general.
If you're looking for a cause, this is your cause. And it's a positive cause. A lot of the previous causes I were in were negative causes, reactionary causes. This is positive. There's tons of space for everybody. You can branch out, do what you want to do, music, programming. I make web shows. Whatever you want to do, writing, get involved in the Bitcoin.
Yeah, absolutely. Get involved. It's not going anywhere, so know that. And if you heard from anybody, hear from me. So don't be scared about these prices, even if you're seeing, honestly, where we are now and where it's going. Anything under $1,000 is a good price for Bitcoin. We're at some cheap prices right now. Take advantage. Get yourself one and study. Look it up. Learn how to transfer it and send it from one wallet to another. Learn the technology. When computers first came out, now you know, in the 90s and the internet, nobody really knew too much about it. Only the ones that did took advantage.
Yeah.
Where they are now, doing well, sitting pretty. I'm pretty sure anybody who with any of these early investings. With Bitcoin, it is as well. That's it. I love music and I love Bitcoin, and I love that I was able to put the two together, and we're having some fun with it. It keeps it fun. It keeps the community lighter. I guess a lighter feel. You know,
not so much science and math. You know,
yeah, because it is very technical. I just feel like it's a way for us to outlet and help you guys release a little stress, because we went through it too, and now we have songs about it. So if you lost money in Mt. Gox, play the song, man. It might help you put a little smile on your face, because we all went through it. Originally, when we lost our money to Bitcoin, the Bitcoinicas major wallet was sitting on Mt. Gox while Bitcoin was in liquidation, and now Mt. Gox is gone. Like I don't think I'm ever getting money again, which is quite a bit. But I'm not giving up. I'm not going to give up on the technology or Bitcoin. I just give up on, it's a loss. But it's huge learning lesson. Huge learning lesson.
Well, this has been a great interview. I'd like to thank you very much for being on.
Absolutely.
And I very much enjoyed your show. It's been a great conference, Bitcoin and the Beltway. And until next time, bye-bye.
Take care, guys.
Thanks for listening to episode 125 of Let's Talk Bitcoin. Content for this show is provided by Adam B. Levine, Andreas M. Antonopoulos, and Thomas Hunt. This episode was edited by Adam B. Levine. Music for today's show was provided by Jared Rubens and Cyrus FX. Any questions or comments? Get involved over at the forums at letstalkbitcoin.com and start earning some of that sweet, sweet LTB coin for yourself. I'll see you there.